Welcome to Straight Talk Wealth, heard every Sunday night at 5 p.m. with your experts in all aspects of wealth accumulation, preservation, and income planning guaranteed to last a lifetime. And now, your host of Straight Talk Wealth, Bruce Weide, on AM 870 KRLA.
Hi, I'm here at the Surf and Sands Resort in beautiful Laguna Beach, California, with Harry S. Dent. Harry is the author of a bunch of best-selling, New York Times best-selling books, which we'll get into. But right now, we've got The Great Crash Ahead, Strategies for a World Turned Upside Down. And boy, it's going to be an interesting world in the next 10 years. We're here to talk about it with Harry today and actually learn how to protect yourself and prosper in the coming decade. So thanks so much for spending some time with us today. So I want to talk a little bit, first of all, about Harry's background here and some of the earlier predictions he's made. He predicted, now the thing about him is he's always contrary, but he's pretty accurate. So when we all thought in the 80s that Japan was going to take over the United States and own most of California, Harry said, nah, they're headed for a downturn. And guess what happened? Let's see, you predicted during the George Bush the first recession, when it was dark and gloomy, and we couldn't quite read his lips, Harry said, there's a great boom ahead, and the 90s are going to be one of our best decades ever. I think if you just say the opposite of what everybody says, you'll be okay.
Well, that is a golden rule in investing. It is. Do the opposite of what people are thinking, yeah.
That's right. And he predicted the current downturn. At the same time that he was saying the 90s are going to be great, he said the wheels come off around 2008. So very contrary and accurate. A couple other points here real quick. I won't bore you, but the federal budget. In 1994, Harry said the government will wind down federal deficits and have a balanced budget by 98 to 2000. Outcome, federal budget was balanced by 1997. Inflation. You said we're going to lower inflation. During the time that inflation was still pretty rough in 1995, you said we'd have lower rates by 95. You said this in 94, and we definitely saw that with a couple other blips, which are explainable, but definitely called the change in trend in inflation. Oil prices. 1992, he says, despite a booming economy, oil prices will remain in the $15 to $22 a barrel range, and throughout the 90s, oil remained below $22 a barrel 80% of the time. Had a couple spikes for some wars and stuff like that, but generally, very, very spot on with trends, et cetera, et cetera. Mortgage rates, price of gold, presidential cycles in the economy, the Dow, interest rates, immigration trends. So when you say the great crash ahead, I thought the government made it all better.
No, I mean, the government can't make it better. The same baby boomers, the largest generation in history, 92 million when you count immigrants, who've been driving up the economy, earning, spending money, raising families, buying houses, borrowing money. Now they're not doing it anymore. They peaked in their spending, they bought all their houses, they're going to be saving for retirement, and their kids are leaving the nest. Again, 20 years ago we said greater boom than anybody expects, but at the end of this, it's going to go the other way. Just like the Bob Hope generation, we had a downturn from 68 to 82. The generation before that, 1929 to 42. Every 39 to 40 years, Bruce, this happens, and economists just don't notice. It's a generational cycle of spending and then not spending.
So let's talk about this. Let's talk about what is different about what you're doing than other economists, what you're looking at and where you're starting from that is different than where other economists start from. And how did you arrive at this epiphany of demographics?
Well, first of all, I arrived at it. I was consulting to Fortune 100 companies at Bain & Company early in my career. And then I started consulting to new ventures that were appealing in the early to mid 80s to the new baby boom generation, young back then, all the new technologies they were innovating, all the new products and services, because young people do start innovation. And so I was forced to study baby boomers, which means demographics. I was forced to study technologies and their life cycles. So I learned a lot of new things doing that. And I actually, by forecasting in different industries, came up with my own economic theory. My theory has nothing to do with traditional economics. It's about demographics, technology life cycles, and the things people do predictably as they age. And even, here's the thing no economist would ever accept, we've already proven. Inflation is largely generated by people, not by monetary policies. Young people are expensive to raise, expensive to educate by the government, get in the workforce. Old people wind down their assets, downsize their homes, live off their savings. Young people are inflationary, old people are deflationary.
But even just this thing of looking at demographics as a starting point, which I think is so unique about what you do. I mean, I went into a financial summit by one of our local DJs here, and everybody's arguing about what the government's doing and all these things. And
this
I said,
policy, that policy, if
I
they
said,
tweak interest rates this much.
So I go in and I say, look, if I walked into this conference and I could prove to you that a third of our population was in their late 20s and they're all getting out of college and they're all getting into their jobs, and guess what? They all want to buy homes. They're moving out. Then they're going to have babies, so they're going to be buying crap, and they're going to. And I'm going to go invest in this thing, and I'm going to lend them money. Would you guys all be worried about the economy today? And they looked at like, oh, wow, where did you think of that? So how did you get onto this, and everybody else misses it in terms of the demographics?
That's
being
where
the
we were. The
foundation?
Great Boom Ahead, the first book, late 80s, early 90s. We were coming up with this demographic theory. Actually, economists back then in 1989 were saying, like you said, Japan was going to overtake the U.S. economy by 2010. I'm like, demographically, this is impossible. We have 3 times their population almost. They'd have to earn 3 times their income. The Japanese are good, they're productive, they're not that good. And then,
But their birth rate was the other element.
well, it had been dying for a long time, and just like China's today. China is the next to be the Japan, and people don't see that. So we were looking at Japan in the late 80s at the top of their cycle, and everybody thought they were just going to continue doing that. We're looking at the U.S. and Europe. No, like you say, we're just 20, 30-somethings. We're just getting going. We're going to really be spending more, borrowing more, buying houses in the next decade. So the 90s is going to be the best decade in history. So we were just looking at demographics. In 1992, when The Great Boom Ahead came out, the books that were selling were The Great Depression of 1990, The Great Reckoning, Bankruptcy 1995. Most best-selling authors and most economists were bearish on the U.S. economy. We're looking at demographics saying, oh, no, we're just getting going. Now, eventually, 2008 and beyond, we will have trouble. But between now and then, we're going to see the greatest boom in history.
So let's go back to an essence.